Hi, and welcome to this week's podcast episode of Web3 Compass. In this episode, I have the founders Marcel and Simon as guests. They founded the DeFi risk management software Defiria, and we are, of course, talking about DeFi and, in particular, also about how their software predicted the FTX crash. So stay tuned. Marcel Kaiser and Simon Blöthner, welcome to my podcast.
Thank you.
Thanks for having us.
So maybe as an introduction, can you please tell me a little bit about yourself? So who are you and what's your background?
Yeah, sure. I guess I'll start. So thankfully, you've introduced me already. Yeah, my name's Simon. I'm a PhD student at the University of Bayreuth. I'm starting to get in my second year right now. I work mainly on the limits of statistical methods and what we can still do while maintaining some form of accuracy. So I employ lots of machine learning, lots of agent-based modeling, but also work on, some of the fundamentals of statistics and our understanding of data and what we can learn from it. And I think I've met Marcel. It's been a couple of years now, probably 2018, if I'm remembering correctly. And we've hit it off right from the start, and had lots of ideas. And one of them was Defiria, which we will get into, of course. But I'll let him get into what he's all about now.
I'm Marcel Kaiser. I am, like Simon, an economist. However, I have been working in the crypto and blockchain space since 2017, I think, or 2018. I started while I was studying economics on the side, working at the Frankfurt School Blockchain Center. By now, I'm, as we already mentioned, I'm having my own startup with Simon, Defiria. I'm also still well connected in Frankfurt, being a DeFi talents mentor. And that's also where my passion really is. Decentralized finance. I've gotten into that as a research, due to a research topic that I planned to pursue for a master's thesis. While I did my master's thesis in the end, within that realm, it was much later than I expected. But looking back, it was exactly the right choice because, it also was like a fundamental starting point for one of the projects that I'm pursuing with Simon. And that's
amazing. Yeah, very interesting backgrounds. And I also checked your LinkedIn profile. And I think we could record a podcast episode alone talking about what you have done in the past. Also, I saw, Marcel, you worked at Wirecard also in the past. So also quite interesting. But maybe for today's episode, we focus on Web3 and entrepreneurship. And is this okay for you?
Yeah, for sure.
Perfect. So maybe also to get a quick introduction to the topic, or maybe a smooth introduction. When was the first time, and also how was it when you first got in touch with cryptocurrencies?
Oh, wow. That was a while back, but actually, I think I was much too young to do anything with it. I think I was 2011. Okay, I wasn't that much too young. I was 17 then, but it felt like I was not in the position to do something with money really, because I didn't have any. I just looked at this internet money because it was attached at a few places beside the price tag, and I was like, "What's that funny currency?" And then when I next looked, it was like $200, and I was like, "What? A Bitcoin is $200? That's absolute nonsense. A currency cannot be that many other currencies." Oh, naive, stupid little me. That's like the most painful moment when I look back, because then the next time that I really had a look at it again, and I started really looking what's behind all of that. It was I think 9,000 to 10,000 euros or something like that, which was, looking at the former price, kind of a bitter experience. But I think that's for a lot of people the pain they've that that they connect with their first experience with crypto. But ever since then, I monitored what happened. I didn't really invest or anything. I just wanted to see what's happening because it was an economically interesting phenomena. I think it was like this weird, not super illegal, but still kind of black market where people do internet money stuff and built on some technology that seemed to be special in some way. But I really I co-founded something that we called crypto meetup in my master studies at Bayreuth. I co-founded that with Jonas Groß. He's also a big name in the German crypto scene. And that's basically what got everything rolling. Ever since I did that, I got connections to Frankfurt and started working there. And beside my little Wirecard side project, I did not stop working at crypto since then. Although you have to say that even for Wirecard, I didn't stop working at crypto, but I even did crypto stuff there a little bit on the side. But if we have time left over, I can venture into that a little bit. I was like a 5-hour per week thing, unpaid. So nothing scandalous there. Yeah. And as I said, that's like, I'd say that co-founding that crypto meetup in 2018 was really the point where I got into crypto somewhat passionately and some sort of in a professional way. And ever since then, it's gotten more deeper and better.
Amazing. Simon, what's your story?
Yeah, so thinking back, I guess the first time I really heard about what it is when one of my buddies talked about it in 2016. I had no idea what he was talking about, but that guy was into lots of, let's say, interesting stuff. And he told me, well, I just got like 6,000 euros from selling my Bitcoin. These suckers, I sold at an all-time high, whatever. And in retrospect, that's kind of funny, but I haven't heard much since then until I met Marcel, actually, right? And I was kind of into the blockchain space because I did also start working for one of the, let's say, research centers here at the University of Bayreuth, the Kernkompetenzzentrum Finanzinformationsmanagement, which is kind of like a research center, and they focus somewhat on blockchain and its wider applications. And some of their research is also into cryptocurrencies. I did not really work as much into that space, but I had a little bit of, getting in touch with some of their projects. But I guess it was in 2019 where I really started to dig into it. And, me being an economist and also more on the heterodox side of things, let's put it that way, understating it. But what really kind of was interesting for me was the possibility of exploring, right? Because there's just something new. There's not too much regulation, which is, not only a good thing, but mostly a good thing, right? But there is just so much exploration and innovation that can happen in such a space. And I have a little bit of an Austrian economist background, and they talk a lot about privatization of money. And some of them are kind of quacks, and well, most of them. But they do have some really interesting points with what they're trying to say, right? And for me, it's just a very interesting ground for people to experiment, and having a structureless sometimes concept with which we can work with one of the most central aspects of how we manage a society, namely money. It's very interesting to me, and ever since I've gotten into, let's say, DeFi and really understood what you can do about having contracts on top of money, right? It's really interesting because the amount of flexibility something or a system like that offers is just so much greater than what we have now. And to be fair, also there is lots of shady stuff happening, right? But just the sheer capabilities and possibilities is just fascinating to me, and that's why I'm always kind of interested in what people come up with in this space. And there are really things that I can, or that I would say, have the potential to change at least some aspect of how we conduct our financial business, our everyday business, right?
Yeah, definitely. I'm also very interested what is going on with the Ripple network, also JP Morgan Onyx, but maybe also a question in this area. If we take like the blockchain technology or distributed ledger technology, I saw that Marcel, you also worked at the Frankfurt School Blockchain Center, and I think you did also some research on Internet of Things and Industry 4.0. And what my question maybe also to you both is, what's your opinion on blockchain adoption in the industry? Because I talk, for example, to developers, and I also watched these big projects. I think last or not long ago, the project of Merck and IBM, they will stop continuing it. And I'm interested in your opinion. Do you think there are good use cases for blockchain adoption in the industry?
I mean, yeah, if I may start, I think we could fill like again a podcast on that topic alone, but I'll make it brief. If we look at, and that also works with the individuals working in the space, right? If we look at the incredible professionalization that has been going on lately, it kind of makes you optimistic for adoption, despite the fact that people have been saying, okay, by 2021, everyone will have adopted it. That turned out to be not exactly right. But still, I'm incredibly optimistic that this is really a tool for the broad masses. And as I said, looking at the people, if I compare myself or also people who were with me back then, who are also still in the space, to that weird group of nerds that we were in 2018, sitting in that empty small university classroom with 4 or 5 or 6 people and giving each other presentations on cryptography, to now having basically tools that enable us to, for example, perform machine-to-machine payments, have really, really complex and highly functional frameworks that allow us to really do anything with value or even identities by now. Then I'd say a terrible lot has happened in these 4 years. Now, I think also adoption-wise, this is, as I said, a little bit slower, but as a metric, if we don't look at the adoption of like only individuals, but also looking at the adoption of or the interest of institutions and seeing how many of them come out and say, oh, by the way, we've been secretly researching for the past 3 years, as Ricky Lamberti of Bosch said today in a panel that he sat in. I think that's a fascinating thing and a positive thing. And that is because I think people are in a state where they have finally found their use cases, but are still not in a position to really realize them. And I think that's coming definitely in the next 3 years, especially if we look at 2026. I really hope stablecoins and blockchain use cases will grow a little bit stronger by then, because then we will probably have some Euro CBDC, and I really hope that the truly decentral ecosystem will be a strong competitor for that.
Yeah, that's a good take. The thing is, during my time that I spent at that research institution, the question we most often got was, why blockchain? Why not use a decentralized ledger? A centralized ledger, right? And that is a question that was often very good, because most of the time you did not need a decentralized ledger. And I think it was this new technology that people were really hyped about, right? And it was the hammer. It was the tool that they called it the hammer. And you can just use everything, use it to do everything, right? It's a screw, use the hammer. It's a nail, use the hammer. Whatever, pipes broken, use a hammer. So, and what that led to is that there was just a huge letdown and people saying, oh, wow, this tool does not solve all the problems that we've been promised it will solve. And of course, this leads to a huge letdown. But I do think that there are very good use cases for which we can apply this technology, right? And it's about distilling these use cases. And then if we think about the whole kind of time dimension of, okay, when did this technology really get going, and when the people really try to adopt it and actually use it for something and use it in real applications, it's not been that much time since then, right? And giving them, there's just loads of time for other technologies before they actually got going. And I just think there's still so much possibility for things to go right, in meaning that it does have wider adoption. And I think it's just a matter of really teasing out, okay, which ones are the use cases where we really could implement it, and which ones are maybe not so good at using blockchain technology.
Very interesting. I personally think in the industry there are not too many use cases, because also from an architectural perspective, oftentimes if you have centralized architecture, they just can scale so much better and are also oftentimes so much cheaper. And also there's the factor of trust, of course. And I think in the industry, a lot of things don't have to be trustless. Because if you, for example, have SAP or IBM or AWS, I personally, or Cloudflare, I personally would trust the companies. However, where I think, in my opinion, is the most interesting use case, it's definitely DeFi. Because I think DeFi has to be trustless, and you really want to have your stake of ownership on this decentralized ledger. And this is why I also took part in the DeFi Talents program, because I studied a lot of use cases. And for example, also at NFT projects, I oftentimes also thought, yeah, it's cool to have the NFT, but the value is built around the NFT oftentimes. For example, also the Bored Ape Yacht Club, you have the NFT, and they build now their metaverse, and they have their merch and their meetups. But it's like, just in my opinion, more or less like a vehicle where you can start this amazing project, but you don't really need like the NFT. You could also use another, for example, certificate on your computer or something which proves your ownership. What's your opinion? Do you also think DeFi is probably the most, most interesting use case of blockchain technology?
I mean, you talk to two founders of a DeFi company, right? Yeah, I mean, I don't even know where to start with that. If we look at what DeFi is trying to become in terms of decentralized financial ecosystem, in terms of replacing or even, let's say, competing with what we have been doing the last 50, 60, 70 years, then you learn a lot from looking at what are banks doing today. I mean, in the end, they are literally only a middleman, and their margins aren't that huge, right? It's not like you can say, like you probably did. I'm not sure. I'm not that old, but like 50, 60 years ago, that banks get absolutely incredibly profitable right away. What they do is essentially quite simple, and we have gotten to a point in the development of technology that revolves around blockchain technology that we can say, okay, if it's not too hard, we don't really need the guy in the middle who's taking, even if they don't take big margins, because we've seen, and I think that's the point where you're coming from. We've seen that we cannot always trust everyone in the financial system. We've already mentioned Wirecard. Now that we have the banks a little bit as a topic, we can look back at 2008, which was the crisis that was initially like the point that Satoshi Nakamoto made, like that was the motivation for Bitcoin, right? And I think DeFi really adds nicely to that vision, because it extends from what Bitcoin has been for the longest part, to something multifunctional a little bit more. Not saying that Bitcoin is not multifunctional, but let's say DeFi is definitely a little bit more viable in what it can do, compared to what Bitcoin could do 2009. And if you look at that, I think DeFi is really inspiring, because as simple as it was when it started I'd argue DeFi kind of started in 2017, 2018. It still provides a huge value, right? I think back then there was only loans, like peer-to-peer loans that worked trustlessly. And you could see that quite fast, not that much liquidity was needed for that to become efficient. And that's a super cool example of how fast these decentralized systems and decentral coordination can become more efficient. And I think that's what DeFi did much better than, for example, the industrial use cases. They, with a snap of a finger, showed that this is very, very possible. And yeah, that was basically the point where I said, okay, this is something very, very cool in the space, compared, for example, to NFTs. No, I think NFTs are great vehicles as well, but like the hype around that, I could not understand as well as the hype around DeFi that was 3 months earlier, or 6 months earlier. I'm not sure. Yeah.
Yeah, to get it out first, I'm not a big fan of NFTs, but that's mostly linked to me not being a great fan of the metaverse. Whole nother story, but they do have their use case, right? But just not in the way I think that they are being implemented or have been implemented in these past couple of months and maybe last year. On the other hand, I think that DeFi is much more, or has been much more successful than the industrial use cases of crypto and blockchain, is because the, let's say, speed of implementation and experimentation is so much faster. You do not have to have something real underlying, right? There do not have to be any machines, any material. And that can be a bad thing, right? Because you might be just building castles in the sky or in the sand, depending on where you want to build them. But the thing is, you can experiment much more. And that leads to so much more innovation, which is why I think that there has been a great explosion of different kind of things that we've been trying in DeFi, and really cool innovations and research actually going on. And not only in startups, but also, let's say big financial institutions. Like I worked at the risk management or risk controlling, or whatever you call it, arm of a large German bank, and they were actively researching into how can we use this trust-based technology, and they did actually come up with something really cool, an idea of settling derivatives. Where you don't really need a clearinghouse, and that actually is a problem in, let's say, financial derivatives that we face these days. And I think there's just a lot of potential, given that this financial space is also not as well regulated. There's lots of shady stuff going down, not only in crypto, but also in TradFi, I guess. So yeah, I think it's really cool that we have this space, and I'm kind of worried about how regulation would cramp down on everything, but I guess we'll have to wait and see.
Yeah, all in all, I mean, a financial system that is democratic and that kind of organizes itself, and where people are sovereign of their finances and their money, is something desirable in general, right? That's a thought that I wanted to add to that.
Yeah, but I think also and that's the second major point I think that could be really, really troubling, is that we see this linkage and really big player being really important, or stuff that where it's just plain fraud, like some of the stable coins that we've seen where their reserves are just not 100% fully backed as they've promised, right? And I guess this might be part of the innovation process, but there's just also lots of dangers lurking there, right? It's kind of this wild west right now, and it has been for a while actually. So lots of potential, but on the other side, it could also be. I don't want to say dangerous, because people should make their own decisions. And looking at this this is also where we come in at some point, I guess, and try to, let's say, give people some form of guidance, or not guidance, but information really, as to how to manage that space, given that these dangers exist.
Yeah, definitely. I think it's, as nearly everything in life, oftentimes just a trade-off where you have to think, okay, what's the balance also between centralization and decentralization? If you, for example, look at the web or at big platforms, on the one hand, you have also free speech. On the other hand, you of course don't want to have like hate speech on the platforms or illegal material. And I think the same thing is with, for example, IPFS. If you have like the interplanetary file system, you use a peer-to-peer network, you have their material, you don't want to be there. How do you regulate it, or do you not regulate it? Same thing with wallet addresses. Sometimes I'm happy to have a bank. If something is not going right, I think it's a good thing to have. And also, I don't know for mass adoption if the current system, I think it has to be improved. I'm also not sure if it has to be centralized to a certain amount, because at the current point of time, I think it's way too complex. Just if I look also with my cold wallet and NFTs to move them there, and you don't see them on your cold wallet, for example, I think you need a very high level of technical knowledge to do all this. But as you said, there are some ways also for those people who are currently in the space to make it easier. And here comes your startup into play. And maybe can you give me an elevator pitch what you are actually doing?
Sure. Before we do that, because you said something about custody, we are not anti-bank or anything. Maybe that as a little bit disclaimer. I think everyone should have like the option to have a custodian, but everyone should also have the option to be sovereign of their funds. And if you are sovereign of your funds, then you are oftentimes like the guy that suffers the most from some scam, the guy that, or the lady who suffers the most if some exchange goes bust and takes the entire market with them, because you're only a little retailer that maybe is not super professionally educated in terms of finance. And that's actually where Defiria was initially thought up to come into play. We want to give retail investors, that they don't necessarily need a big wallet for that, the opportunity to have the same grade of risk management, the same access to analyses, to information that big banks have. And that is, they will probably not outmaneuver professional investors because of that, but at least they have a shot, because they, with our help, can define contingency strategies. And it's better to have a plan and not need it than to need one and not have it, right? And we build basically an app or a website, a portal where you can simply hook your wallet to. It is aggregating a lot of data. You get very, very interesting analyses, forecasts individually to your portfolio, or to any portfolio you would like to see, because we really don't care whose portfolio you want to check out and analyze a little bit deeper. And you get live warnings if something goes south. You get an alert if something depacks, for example, and you really get to be also using backtesting and all the tools you really require. You really get to be the the sovereign of your finances in a way that maybe you're not able to do unless you're a professional investor, in an understandable way. And that's basically what Defiria is about.
So when investors try to, let's say, get into the market and everything, right? What we think about as the most important thing is trying to optimize your growth rate. Nothing will hinder the growth rate of your portfolio more than a sudden drop in your portfolio or your positions or whatever you're trying to maximize. And this is where we come in, because the tools that we offer are really designed for helping people kind of at one point kind of mitigate some of the risk, but they might even profit from some of the uncertainty. This is what we also think of, right? Because uncertainty is, or risk, these concepts are very vaguely defined, and they're even more vague in the non-scientific space. So thinking about these concepts is somewhat hard for most investors. And what we hence think is that, well, let's turn this frown upside down and let's say, well, even if there's high volatility or higher risk, or however people usually define it, which I might not agree with, but is, well, maybe we might be able to leverage that and kind of gain from that. And this is also one of the kind of key philosophies that we try to instill in our products. And this is some of the stuff that we've been working on. Okay, how can we not only give people the information, there is danger, or hey, here's potential, or look at this strategy is better than the other strategy that you've been planning, but also, hey, there is potential for you to gain and maybe even outmaneuver some of the other market participants. And what it really comes down to is maximizing that growth rate of your portfolio. And in my philosophy, there is no trade-off between risk and return. It's the same medal. It's just looking at it from different sides. Because if there's one downturn, no matter how much wealth you've accumulated before, it will wipe you out. Or if it doesn't wipe you out, it will kind of set you back, as it were, like in terms of, okay, I've been invested now for so long, and now this one crash, and this kind of made all the gains that I had kind of go to zero for the last couple of months.
Totally understandable. I think right now at the situation when I did my investment banking internship, like a mentor in the bank who worked at the probably hedge fund light would be the right term to describe it. And I thought about shorting the VIX, right? The uncertainty index. It's like, he said it's like throwing pennies before the steam engine, or how do you say it? And then at some point of time, of course, it will go up, and your profits will go to zero. But I'm very interested in your product, and you said a lot of things. I want to dig a little bit deeper into that. So you're building a B2C solution, right? So it's for users like myself.
Actually, it's for anybody.
Yeah, Right. We had to soften that up a little bit because, funnily enough, with that pitch, we attracted a lot of people who were interested in that that were not retail investors. So we thought, okay, how can we design something that is for everyone? I think corporate treasurers, they will definitely get into DeFi within the coming year as well. And you also need like something for them. But the good thing about what we do is, sure, you can build different buckets that you kind of have for everyone, with different packages. But like the entire thing and the philosophy that Simon just beautifully outlined, that is also true for any institution, right? So yeah, we start by building something that probably is at this very moment a little bit better for retailers like you and me. But in the long run, it should be something very usable for everyone in different packages. but yeah, go on with the question. I'm sorry.
I have just some quick fire questions to get more information on your product. Is it currently live and running? So are you already live?
No, we are currently in closed alpha, very closed alpha testing.
Nice. And do you also have users except yourself on the platform who are really testing your solutions?
Yes, there will soon be more. But still closed.
Very interesting. And despite the risk management part, you also said you want to maximize the return of the users. And is it something like where I, for example, if I also have, let's say, cryptocurrency stored on my cold wallet, where I can say, okay, I have, for example, 50% Ethereum, 30% Bitcoin, and I just put in my asset allocation, and then you give me like a Sharpe ratio or like some way how I can maximize my returns, or how can I imagine this?
Yeah, stepping right on my toes because I'm not really a big believer in some of these financial metrics. They might work in some circumstances, but from what I've been gathering in these past couple of years working on that stuff, they might be misleading, right? In some circumstances, they do really kind of make sense, and looking at them does give you information. But yeah, so the metrics that we'd be using are not what you'd be finding in standard financial textbooks. This stuff that I've been developing with some of the researchers and let's say one of my bosses back then at the risk controlling kind of department. But you will be able to evaluate the strategies that you want to kind of look at. And for this, we also plan on implementing stuff where you can kind of say, okay, let's backtest this strategy against this. And we think that the metrics that we are supposing are even better at comparing the different performances of how you can use the capital that you are able to allocate in the best way. So you're able to tease out, as it were, the best way to kind of go about using your strategy. And I think this is something that Marcel also kind of hinted at before, is that we are not in the game of saying, okay, we'll take your money and we'll manage it for you, because there are still so many strategies, right? And we are using or living in the DeFi space. So it's not only, okay, you have Ethereum, Bitcoin, or whatever is your favorite coin, but there's also, let's say, lending, there's pooling, there's just so much stuff going on. And these protocols require a lot more information and simulations, for example, that are able to give you that information precisely. So you're kind of able to compare different strategies and combine them. And this is why we think this more holistic approach of, let's say, okay, we have so many different things, we do not want to give this one strategy that we think is the best, because maybe you have some insights into how the market's going to develop, or you have a strong opinion, or you just want to manage your finances yourself and you just need some information as to how to manage your risks. And or maybe you want to compare strategies given different metrics and you want to check out, okay, what's best here, what's best here. And this is where we really come into play. We do not think, we come at this from a standpoint of humility, right? We say we do not have all the information about, okay, this is the best asset to pick. It's just given that this is the kind of information that you have and what you think is best, how are you able to then compare strategies? And if you have chosen one, how to actively, or not even actively, semi-actively manage that position so as not to expose yourself to enormous amounts of risks, and which is then, in the end, the thing that we're trying to do, which is maximize the growth rate of everybody.
Understandable.
And to add a little bit to the first technical question that you asked, you don't need to specify anything in our app. You don't need to tell us necessarily, I have X, Y, and Z or anything. You could, in your example, just copy paste your cold wallet address. And since that is public data, we are not like skimming or doing anything. If for those who don't know how public blockchain works, that is all public data. You are giving that to the entire world anyway. You just give us a wallet address and we'll aggregate every asset, every position that you have. And we are also, as Simon also lined out, we are not a trading bot or anything. We don't have one strategy for everyone. We have, we have data that is different for every individual and different in literally every, I think, 1 second interval. So also on the time horizon. And all that happens quite automatically. It is beautifully interpreted. You get nice fancy charts and graphs.
Very interesting. And also talking about the metrics, reading Black Swan and maybe also looking at the fund performance. And I also want to have here some humility, but comparing the fund performance of some portfolio managers to just ETFs, the question definitely comes up. Are the traditional textbook metrics really so good to outperform the market, which is questionable? But I would like to know a little bit more. You said, okay, you have other metrics, but how can I visualize this? Let's say maybe we can take myself as an example. If I say, for example, okay, I'm interested in, let's say, Ethereum, a little bit of Bitcoin, and maybe 2 or 3 altcoins. What would your solution do for me? You would, first of all, you would help me with the risk. So if something in the market goes not right, and you have also a great story here, right, with FTX. Maybe you can elaborate a little bit on that, and also what you are doing additionally.
I think let's answer the really serious question first with Simon, and later on I'll have my little FTX anecdote.
Okay. So what we could be looking at in your case is, okay, how much of your capital are you going to allocate to which of the assets? Which is really basic, but I mean, you hit the right chord with me mentioning Nassim Taleb, which is one of my great intellectual inspirations, I guess. But also coming from said, let's say, intellectual school, are also people who are looking in. This is something rather technical, like ergodicity economics. But you can really think about, okay, how do I structure a portfolio? How do I set it up in such a way as to then maximize, as we mentioned, growth rate, right? And so we would be able to say, okay, maybe your positions should be like that. And also, do not put all your funds in right now. There are, let's say, one of the metrics that people could be looking at is like a Kelly criterion, where they say, okay, how much of my total portfolio am I going to bet now versus just going in all the way at once. And these are, for example, metrics that one could look at, but it's just one of the things. And then we could say, well, people always look at, okay, risk aversion and how risky do you want to have it? And then there's a scale from 1 to 10. We kind of think that's somewhat too vague and almost kind of bullshitty in a way that it is very confusing to people and can hide lots of risk, right? So we want to give the people a clear interpretation of what something like that means. So we say, okay, this is the extreme case. This could happen if we look at, for example, the tails of the distributions, right? The far end extreme events, as you've said, the black swans. I mean, you cannot really measure black swans with statistics, but something which goes into that direction. So this is one of the approaches, right? We give the people or customers the ability to kind of really gauge all of the, let's say, scenarios that could happen. And then we say, okay, what do you want to optimize? What are your preferences? You see, this could happen. And given that, what are your preferences? What do you want to do with that? So these are some of the things that we could be looking at. And even going further on that, you could then, if you say are in some DeFi positions, if you are in some pooling protocols and you want to avoid certain adverse effects on your positions, you could then also think about, okay, hey, maybe I'll get into options, right? There's a growing body of options companies within the DeFi and crypto space that offer some of the tools you can use to insure against certain events that are definitely really interesting for any investor looking to optimize their growth rate. Now the fun part.
Yeah, and now getting to the anecdote you were hinting at, I think it serves as a very nice example for what we want to do. Like, we had this, we are working on this project, right? So we are talking about all of the stuff that Simon just outlined. We are putting that into code. We are not live yet. We haven't seen any money for that yet, and that's absolutely fine. But back in in the end of the last year, we had all of these, like, parts of this technology was ready, and we had really nowhere to apply it yet. That's the picture I want to draw, right? So I'm this economist who's kind of working in DeFi, kind of working in crypto, but I really don't have I'm not tracking every single coin or every single exchange or anything there is. And I think it was inspired by a friend of mine, Cedric Hyde, who said, I don't like FTX. I think they are fishy. And I'm like, FTX, I happen to know they have a token, right? So let's just look at the pure naked statistical data, like no real research going in there, because I really, as an amateur investor, I had some funds in FTX. But I didn't really look into FTX that deeply, especially not in a live way. I did that a few years back, I think. I opened some position there. I had some funds there, not really much, but still I knew I had some there. And I was like, okay, I have this thing in my drawer and it's absolutely unused, this Defiria algorithm. So what I did was I checked for the FTX token, and it said, like, okay, it indicated to me that the volatility over the next time window that I specified was going to be extraordinarily high. And I was like, hey, now wait a second. That's not like the other data. We didn't have an alarm system at that point. That wasn't popping up at that point. It was just literally, okay, I've seen some other data points and they looked much more relaxed. I was like, okay, I just in case, I don't need that exchange anyway, I take out my funds. And I have that screenshot of a mail that I have withdrawn my funds and everything. And I was thinking that was probably overkill. That was just, and I think 1 or 2 days later, it must have been the 5th or the 6th of November when I withdrew my funds. 1 or 2 days later, all hell broke loose. And that was really comfy. Like, I didn't save my financial assets in a big way, but if I had big funds there, I would have. And that's the kind of situation that really makes the difference. And I'm a good example because I'm really a guy that had no real, I didn't track every day the token or the institution where I had my funds at, right? And retail investors don't have time for that. So I kind of became the first successful test for our product with that. And I'm not saying nobody could have known, because, for example, Cedric Hyde, he knew. He kind of smelled something for some reason. I'm not sure. And if you really deal with FTX and you have them on your radar and you observe what's happening there, you probably could have known as well. Some people might have even had rumors. I didn't check the articles back then, but it wasn't like public. It wasn't like, that's definitely fishy, as it was like the next day and the day after. So that was the moment where I thought, okay, nice. Whatever we got, it's kind of working here. And that's the beauty of the thing. If that happens once throughout your lifetime with that tool, then the tool has already been worth it, right? Because, as Simon said, if you have like you can have the most beautiful growth rate. If you have one time a 70% drawdown or whatever, because you lose everything because of some FTX scam or whatever, then it doesn't help if you keep up the great growth rate. You will be outperformed by someone who's not having nearly as nice a growth rate, but just doesn't have that massive drawdown. And they will end up having more assets.
100%. I think it's amazing. So I personally, from a business perspective, I would make a case study. I would go to institutional funds and probably say, okay, we want to have 20K or even more for a yearly license. Would probably track every big coin, also Tether. You talked before about it, Simon. I think there might be risk implied, but also all the other exchanges who have their own coin. Also Binance with their BNB coin. Of course, they are the biggest exchange in the world. They have a lot of power behind them and also a lot of manpower. But who knows what will happen there, or KuCoin or all these exchanges. Who knows what will happen? And if you just have all the data, I know it from a cybersecurity perspective, you also have here threat feeds. And you measure what is going on in the world. And the more data you have, the better you can train your machine learning or even artificial intelligence, if you can train a neural network. I think this is really interesting. And also I saw the post on LinkedIn you did, but I thought crazy, why didn't it go viral? And this is why I also wanted to have you in the interview, because I think, okay, wow, you don't only have a product, you also have proven your product. And you should make a case study with your email and probably your blockchain record where people can check it and verify it and go and implement it in your go-to-market strategy once you launch your product.
That sounds like a great idea.
Yeah, I mean, it's a nice thing. It's a very nice thing to shout from the rooftops. But the reason I'm not doing that exactly like that is because I don't want my wallet to be public. Kind of don't want to dox myself. But honestly, actually, it was lucky that it was with a centralized exchange, because you could have said the same thing could have happened to a DeFi protocol, right? We've had a somewhat decentralized structure with Terra, which we, by the way, also found in our backtesting, but that's a different story. But with Terra, I would have had to dox myself if I had pulled something like that off by showing screenshots of my wallet address and everything. But the nice thing is, with FTX, I have an email that I can really show around. Yeah. Thank you for the thoughts, Sebastian.
Next time when there's some implications, or when your, I don't know, alarm rings and you have a red screen, you have to make a LinkedIn post or shoot me a DM to warn me. And then I will also cover myself. But yeah, very interesting. And also I'm very interested when you launch your product. And maybe to wrap up the interview, I have a final question for you. This is, where do you see DeFi in 5 years from now? So where do you see DeFi in 2028? What are your predictions?
Simon, you want to go first? I want to leech off something smart you say now.
All right, let's gather my thoughts real quick. So DeFi in 5 years, I think it will have condensed. I don't think there is going to be that much heterogeneity, and I think it will be for the better. I do think that we will still constantly see new, let's say, services and new ways of financial intermediation prop up. And that's something that kind of alludes to the question that you posed to us a while back, right? We say, okay, why was DeFi so much more, let's say, successful in implementing blockchain than other use cases? Is that the financial intermediation is, okay, just how can I get capital from one period in time to another, and as safely as possible while still getting some return, or while insuring against something, which is basically the whole theme, or one of the three things why we need money for, basically. And so I think there's just so much more innovation going down, but I still think it's going to be much less broad, but we'll see some of the clear use cases that have been, I'd say, covered by TradFi being carried over. But I also think that we'll see new stuff like the aforementioned derivatives. These are just now really exploding. Well, not exploding, but I guess to their own respect, they're exploding. I mean, from a very low base. But I think this is really interesting what really could go down there, because in that case, the real problem is the trust in most cases. It is that people lack maybe the cover, right? When you hear about some hedge fund going bust because they were not able to cover their shorts, stuff like that. And there are actual innovations that want to, or that try to somehow address this problem of, okay, people are not able to post collateral, stuff like that. I think it is these areas of, okay, where we need to have some form of trust, where DeFi will really shine in the financial intermediation.
All right. I've gathered my thoughts as well. I want to paint a different picture a little bit. Now I get to be technical a little bit. I think what we will have by 2028 is a CBDC, a self-sovereign identity, a digital identity of any sort of way. And we will also have great improvements in terms of wallets, recoverable wallets. It will not, I mean, you can already do this with threshold wallets, but it will not be the case anymore that once you lose your key or your device that the key is stored on, you cannot recover it. There will be wallet providers that allow you to recover that using cryptographic techniques. And people will be very, very used to using digital wallets because of SSI or digital IDs and because of CBDCs. That means we have, in theory, a very real competition between the classical financial centralized sector and DeFi and the crypto space. And you can not necessarily only a competition, but also like a synergy. I'm sure that will also be there, but people can then decide very easily, because it's not a technical hurdle anymore, if they want to put their money there or here, if they want to use whatever stable coin or CBDC, or maybe even cash still exists. One can be hopeful. And they will have all of these things available for them, and they will be side by side. And then people will see what's really well performing, what's comfortable, and they will have their own experience. They will see that these systems will feel different, they will work different, and they will definitely lead to different outcomes. And I think 2028, around that time, will be a very defining time window for where we go with how we handle our value. And of course, Defiria will be pre-installed on every smartphone that's sold then. But that's just a side note.
Great. Yeah.
And also, sorry, one thought. I hope we really will not, either way, whether be it CBDCs or DeFi or any synergetic anything, I hope we will get to a point where people don't have to say, I want to profit from that. I want to profit from trustless and decentralized things. That's why I'm giving my funds or my money, my hard-earned money, to some random dudes I have to trust. That's like a hope I have. Yeah, sorry for interrupting.
No, that's great, and I also hope this will be the case in the future. And yeah, I'm really interested and excited when you launch your product. And also, I think it would be definitely funny to reflect in 5 years. probably I hope you will be sooner on my show again, but definitely we have to reflect in 5 years. What of your prediction will be true or what have become reality? But for now, I thank you very much for the interview.
Yeah, thanks for having us. It was a great fun.
Yeah, it was actually a pleasure. And I think it really made us, it gave us something. Yeah. Thank you, Sebastian. For all of your listeners, feel free to follow us on LinkedIn, check out our homepage, defiria.app. We will do our best to keep you informed when we will be there for you. We hope it will be soon. And yeah, stay safe, check your funds, check your trust anchors. Don't trust random internet weirdos.
Thank you for listening to this week's podcast episode. I'm currently thinking about organizing a meetup in Munich, a Web3 Compass meetup. And if you would be interested in this idea, I'm happy for your feedback. So a lot of you know me personally. You can always text me via WhatsApp or write me on the Discord, shoot me a LinkedIn DM. And yeah, if enough people would be interested in such a meetup, I see what I can do. And for now, have a good day. Cheers.